on screen. So today we're going to be looking at making tax digital for income tax and why you should prepare now. It's going to be quite informative in terms of what making tax digital is, and then I will be talking about why you should prepare now. I'm really exaggerating on the fact that it is going to be a big change, and it would be very silly to leave it till the last minute when it comes into legislation. So my name is Aidan Corcoran. I'm a personal tax senior at GoSimpleTax. I've been in the tax industry for about 10 years, and I've worked for GoSimpleTax for a year and a half, just over now, I think. So I originally joined to do the webinars and help develop new services, such as a tax return review, which has been quite successful in the last 14 months that we've been running it. So the content of this webinar, we'll be looking at what is making tax digital for income tax and self-assessment, also known as MTD for ITSA. I'll be using probably making tax digital for income tax throughout this webinar, so don't get confused. That is exactly the same as MTD for ITSA. We're looking at what it is, who is affected, and when does it start. We'll be looking at what the pilot scheme is that's currently available. We'll be looking at the transitioning to MTD, such as digital record keeping requirements and adjusting to the change. We'll be looking at deadlines and payments if there's any changes to those, and then we will conclude. Throughout the webinar, we have a few polls. So when I have a poll, which I think is on the next slide, Leanne will kindly pop that up on screen, and you'll have multiple choices to answer. So first of all, are you aware of making tax digital for income tax? So Leanne just started that for me very kindly, and you've got 3 options. Basically, no, never heard of it, yes, but unsure what it is, and yes, but here to learn more. So we have people voting now. We're currently on about 50% of people answered, so I'll wait probably 10-15 seconds, and then I will publish the results and just have a little word about so last few seconds to vote. I know that everyone hasn't voted, so if you can vote, 5 people that haven't voted. But okay, so I'll just publish these results now. So on your screen now, you should be able to see that 25% haven't heard of MTD, 6 people or 37% have but are unsure what it means, and then you have 6 people or 37% here to learn more. So fairly confident in those answers. That's good. Hopefully everyone by the end of this webinar will all be aware of what MTD is and their requirements. So just hide that and pop back to the webinar, and here we go. So what is making tax digital for income tax and self-assessment? Well, you've got what is it, who is affected, and when does it start? So basically, what is it? It is digitalising the tax system, making use of technology advances since self-assessment was originally introduced in the 1990s. I do think it was 1996. So if you can imagine what mobile phones were like in 1996, I think they were very in the early days, if any. So you can see how much technology has advanced, and therefore HMRC are trying to embrace this change and the advances, and therefore get people reporting more often and hopefully getting a hold of their taxes and on top of their taxes going forward. So it is basically individuals that fall within the requirements will have to keep their accounting records electronically, either by using suitable software such as GoSimpleTax or on a spreadsheet. The requirements will be to file quarterly to HMRC with details of income and expenditure, together with any other information that HMRC needs, such as usual name, UTR, etc. There'll be a final end of period statement, which will include all the adjustments that are currently included just as normal. And then there is also a final declaration or a final crystallization, which then includes all other income. So it's effectively splitting the tax return into multiple submissions if you are a business owner, that is a sole trader, or a landlord. So that's what it is. Who is affected? So just as I said, it'll be sole traders and landlords with gross turnover. Notice the word turnover and not profit. So gross turnover, which is effectively just income, of over £10,000. If a individual has both a sole trade business of, let's say, £7,000 turnover and also a rental property of £5,000 rental income, then the gross combined total for MTD related income is over 10,000, as 7,000 plus 5,000 is 12,000, and therefore they will be required to report through MTD for both businesses, one being their sole trade business and the other being their property rental business. So I'll go into a little bit more about the quarterly submissions and the end of period statements a little bit later on, about when they're due and when they need to be submitted, and what needs to be submitted in a little bit more detail later on. But it is worth noticing noting that if you do have more than one business, it is a combined gross turnover or gross rental income that you will have to look at in order to see whether you need to register for MTD. So when does it start? Well, it starts from April 2024, which is the tax year for 24-25. Basically, it was on a written statement in September 2021, where it was confirmed that MTD for income tax would be delayed by a further year. It was originally planned to start in April 2023, but with COVID and a lot of pressure from professional bodies and software providers, they basically said, right, okay, we'll delay it until April 2024. So making tax digital for income tax will be introduced from April 24 for sole traders and landlords, as I've mentioned. General partnerships will not be required to join until April 2025. So if you have partners as clients, or if you are in a partnership, then it will be the partnership that will have to join MTD, and they will join from April 25. It is worth just jotting back to the who is affected, as I'm going to elaborate a little bit more. So who is affected was obviously sole traders and landlords, but there is a bit of a change in terms of who has to go into it. So if I just click on who is affected, we should be brought to a slide which mentions the basis period reform. So HMRC have basically looked at how we can make making tax digital easier, considering someone with a different accounting period or a different accounting year end to the 31st of March or the 5th of April will report very strangely on their tax returns currently. So if you look at the top table, you've got a current format of the 22-23 tax year, for example. Someone with a 30th of June year end will report the 1st of July 21 to the 30th of June 22 on their 22-23 tax return. Likewise for 23-24, their year end of June 23 will fall into the base period of the 1st of July 22 to the 30th of June 23. What HMRC have said is this is going to confuse matters for everyone when MTD comes in, because MTD specifically wants the tax year. So what they've basically said is from 23-24, we're going to have a transitional year for a basis period reform, whereby anybody with an accounting year end that doesn't tie up to the tax year will have their normal reporting period of the accounting year end, as well as a transitional requirement of the remainder of the tax year. So if you look on the second and third rows of the table, the second table, you can see that in 23-24, which is the transitional tax year, you'll have a full reporting period for the 30th of June 2023, which is the 1st of July 22 to the 30th of June 23, as well as the transitional requirement of the 1st of July 23 to the 31st of March or the 5th of April 2024. This effectively gets all profits taxed up to the end of the tax year, or coterminous tax year, ready for MTE to start from April 24. During this transitional year, you will, if you have overlap profits, be able to claim overlap profits on the transitional requirement period, and therefore you won't miss out on any reliefs that should be available to you if you were to change your tax year. But then, even though somebody's accounting year end will stay the same, so 30th of June 2024, during the 24-25 tax year, the actual basis period, which is the time period that HMRC uses for tax, as you can see the definition in the middle of the two tables, will actually go with the tax year, either the 6th of April 24 to the 5th of April 25, or the 1st of April 24 to the 31st of March 25, whether you want to do tax months or calendar months. I believe is up to the taxpayer themselves, which I'll touch on a little bit later. There also, who is affected, there are some exemptions, not many, but there are some. You've got an income threshold. Obviously, if your combined gross income is under £10,000, then you don't fall into the MTD requirements. And also there are digital exclusions, basically for the old generation age, where it would not be reasonably practicable to get them on all these electronic systems, whereby they might not be used to technology and therefore will very much struggle. Whether they are subject to an insolvency procedure, so obviously going under, or whether the business is run by practicing members of a religion, whereby their beliefs are incompatible with using electronic communications or systems. Anybody who does have an exemption will need to apply to HMRC prior to the tax year, and HMRC will confirm whether they fall within the exemptions they allow. So quite a lot of information included on there. So I'll just let you sink that in a little bit. Any questions, as Leanne said, make sure you put in the top left of the screen. You'll see a little Q&A box. If you press there, you should be able to ask questions. So moving on to the pilot scheme, currently available, and it is quite limited though. So you can sign up now, provided that you are UK resident, registered for self-assessment already, completely up to date with all submissions, and you are a landlord or a sole trader. You can't be both, and you can't have any other income from other sources, such as foreign income, interest, dividends, anything of the sort. You just need a very basic return of either being a landlord with multiple properties, or a single property, or a sole trade with one single business. You can't join the pilot scheme if you have received any of the HMRC grants, such as the coronavirus job retention scheme or any of the income supports payments which fall under the SEISS. So a very small collection of people can join the pilot scheme at the moment, and it will be a soft pilot whereby you'll be following all the requirements of HMRC, submitting quarterly, you'll follow all the requirements of submitting quarterly and including the end of period statement submission, but you will not be penalised if you do miss any for now. This is obviously a pilot scheme to try and get a feel for whether the system works, and it's been going for over 12 months now, so HMRC have got a good idea of what's working and what isn't, and they'll obviously amend that prior to the April where it comes in 2024. So nice and quick on the pilot scheme there. There was meant to be an update to the pilot scheme in April, but I've not seen HMRC send any correspondence out in regards to opening up the scheme to more people, which they should have done. But I'll keep an eye out for that, and I'm sure we will send out any communication once additional requirements or additional people can fall in the pilot scheme. So moving on to the transitioning to making tax digital (MTD), and we've got 3 points mainly on here. We've got what am I required to do? So touched briefly before. We've got quarterly submissions, end of period statement, and a final declaration, only subject to making tax digital list. So quarterly submissions are effectively just income and expenses for a quarter, whereby you can report. So, for example, the first quarter is going to be April, May, June, and that is what will be required to be reported. You'll have, once it's submitted, HMRC will send out an update of an estimate of tax that you are going to be due for the year, and therefore it is expected to help people budget and save for tax as and when they're submitting their quarterly. So if you were to submit, let's say £10,000 in the first submission, HMRC would look at that and say, okay, they've got taxable profits of £10,000. We'll expect this to be similar throughout the year. Therefore, we can estimate that tax will be due on X, let's say £40,000, and therefore they'll give you an estimate of your tax due for the year, how much you should put aside at the moment for that, and therefore people should be quite on top of it when saving for the tax. You will have an end of period statement, which includes all the adjustments and the accounting adjustments, tax adjustments that aren't included on the quarterly submissions. So the quarterly submissions are very basic in terms of it's just income and expenditure. End of period statement includes all of the disallowables, capital allowance claims, all that sort of thing, all going through the end of period statement. The end of period statement is due by 31st of January, same as what tax return will be due following the end of the tax year, and it's expected to be submitted with the final quarter, HMRC have said, but the deadline doesn't tie in with the final quarter, it ties in with the final declaration. So what is a final declaration? A final declaration is effectively crystallising all the information that you've sent on the quarterly submissions and the end of period statements, as well as including all other income. So all other income would be your income from interest, dividends, foreign income, trust income, anything that you may have that doesn't fall within the MTD requirements, such as your sole trade and property income. All that will be included on your final declaration, and effectively the final declaration replaces the tax return. So MTD approved software, you've got spreadsheets with APIs, which is effectively a spreadsheet which is designed specifically to submit the data to HMRC direct. There'll be a button, probably using macros and connection to the internet, whereby you'll be able to submit quarterly submissions and the end of period statement. You'll have full package system, such as what GoSimpleTax will be, whereby you can submit everything, and it also includes the record keeping requirement. So a full package system is basically you'll enter all your details in there. You'll have somewhere where you can keep the evidence as well, so the records, attaching receipts to entries, which I'll show you a little bit later on. And then you'll also be able to submit the end of period statements and the final declaration with all other income. Or the third option, which is the most basic of all, would be bridging software, whereby it'll be a spreadsheet with specific formats, and you'll have an import feature on, let's say something online, whereby you'll import that specific format and it'll be read and submitted to HMRC. Whether we include that on GoSimpleTax to cover two of the options for approved software is yet to be seen, but I do believe that we are looking into having the bridging software availability of importing the spreadsheets. So looking more at the quarterly submissions and the end of period statement, which will be per business. So I always use myself as an example here. I have got 2 different businesses for myself. I am a personal trainer, obviously in the fitness industry, and I also have a clothing brand. So for me, provided that my combined income or turnover for the 2 businesses exceed £10,000, then I will have the following submissions. So from the personal training business, I will have quarterly submissions, 4 of them during the year. I will have the end of period statement, which is expected with the final quarter, but doesn't have to be, for my personal training business, as well as quarterly submissions for my clothing brand, as well as an end of period statement for my clothing brand. So overall, I will have 10 submissions for 2 businesses, as well as a final declaration for the combined of those businesses, as well as all my other income. So my employment income from GoSimpleTax, any bank interest that I may receive, any dividends that I may receive, etc., etc. So whereby you're used to submitting one tax return by the 31st of January following the end of the tax year, you're now submitting at least 5 times more than that, because you'll obviously have your quarterly, well, in fact, it's 6 times more. You'll have 4 quarterly plus 1 EOPS, which is 5, and then the final declaration, which replaces the tax return effectively. So that's 6. So yeah, you'll be having 6 times as many submissions during a tax year when you're used to 1. So there's obviously a lot more preparation. There's a lot more time going to be spent on collating the information. However, rather than doing it all at the end of the tax year, which I'm assuming 90% of people do, if you don't, then hats off to you. But 90% of people, I assume, wait until the last month, so you've got December, January, and then try and gather all their information. You'll be having to do that every 3 months going forward. So moving on to this, we've now got deadlines and payments, and we're going to look at quarterly updates, end of period statement, final declaration, and payments. So quarterly updates, nice and easy. We've got a little table as a prop. So as I mentioned before, you've got tax months or you've got calendar months. So for those that went in the transitional year for the basis period reform, actually choose to have the tax months. Tax months always run from the 6th to the 5th of the month. And you can see in the first table that the first quarterly update will run from the 6th of April to the 5th of July. The filing deadline for that will be the 5th of August. So you effectively got 1 month to file your quarterly returns. Likewise with the quarter 2, you've got the 6th of July to the 5th of October, and that will be due the following month by the 5th of November. Quarter 3, 6th of October to the 5th of January, filing deadline 5th of February. Something that I'd better point out there is that you will still have last year's tax return to file by the 31st of January. So hopefully that you don't leave it till the last minute. But if you leave it till the last minute on the 31st of January, you would have already submitted your quarter 1 and quarter 2 for the following tax year. Quite interesting to think that you do have that overlap in terms of years there as well. And then moving on, you've got the calendar quarter election, which you have to speak to HMRC about again, but it's effectively asking them to do it by calendar year, calendars months rather than tax months. So you'll be then going to the 1st to the 30th or the 31st or 28th or 29th, depending on the leap year, on the period covered there. So if you choose to make a calendar quarter election to HMRC, then the period covered will be the 1st of the month to the end of the quarter of the month, so end of the following month. But the filing deadline does stay the same, 5th of August, 5th of November, 5th of February, and the 5th of May. So there's your period covered, and there is your filing deadlines, depending on whether you choose tax months or calendar months to make those quarterly submissions. End of period statement is due by the 31st of January following the end of the tax year, same as the final declaration, as mentioned before. And then payments. There's no change to payments at the moment. Balance in payment will be due by the 31st of January as normal. If you fall into payments on account, they will also be due January and July as normal. There is, however, speculation online that provided that there will be quarterly updates and taxpayers after the first couple of years should be well on top of their submissions. They don't see why not that they'll change the payment schedule to either being quarterly and more frequent, more quicker, sorry, or whether they will just stay as they are with January and July. As I say, it is speculation online, but it does make sense if they were to change the payments from half yearly or annually to quarterly to follow in line with the submissions. Don't hold me onto that. It just makes sense in my head. Obviously, people aren't going to like paying sooner and more often, but I can see HMRC definitely going down that road, as in the last couple of years they have cracked down on missing tax payments quite a bit, especially over COVID. So don't hold me to it, but I do think that in the next few years, once MTD gets introduced and hopefully is running smoothly, there may be updates to payment dates and payments on account. So quite a lot of information overall that I've spoke about here. So if Leanne can kindly pop up the next poll. Having seen what MTD will entail, how do you think you will complete your returns as it comes into effect? So you're still unsure, looking at software, looking at bridging software. My accountant will do it for me, or I will use GoSimpleTax. So a handful of votes already. Everyone can vote, please. I'll hold off again, 20, 30 seconds. And once the numbers start showing on the votes, I'll just go over them quickly and go from there. Just need to cough 1 second. Voting looks to be, oh no, there's still people voting. Okay, it looks pretty static now. Okay, so looking at this now, we've got 28% of people still unsure, need to look. We've got half of the people I'll be looking at software. We've got 14% of people I'll look for bridging software. I'm assuming that you lot like your spreadsheets and will be able to adapt to that. You've got 7% of people will be using an accountant, and 0% of people will be using GoSimpleTax. We're going to go through a little demo of GoSimpleTax a little bit later on, so hopefully for those that are looking for software and are still unsure, you can always have a look at GoSimpleTax, and if it's right for you, then you can sign up at a discount and hopefully get used to the system prior to MTD coming in. So I'll just hide those results for you and just go into a little conclusion. So what can you do to prepare? That was a question when we first started the webinar. So just a little close. Now we've got small changes will be required as a minimum. Hopefully from the information provided in this webinar, you will see that that is obviously true. By small changes, it actually means huge changes. You're going from annual submissions to quarterly submissions if you fall within the requirements, along with additional submissions at the end of the year, such as the EOPS and the final declaration. At the same time, you'll also have the previous tax year to be submitted, so hopefully people get that done early in April 24. So it'll be adapting quite a lot in terms of how often you look at your accounts and how you store your information. You start planning now because it won't be delayed again. HMRC were reluctant to delay it from April 23 by a year. So they've pretty much said in all correspondence so far that it's going ahead. We're not going to delay it. We don't want to delay it. We've spent too much money on this so far. And from the feedback they've got from the soft pilot so far, everything seems to be going okay. Whether that actually works when you're introducing millions of taxpayers potentially into this system, it'll ask a few questions. But yeah, they're not going to delay it again. And in terms of starting planning now, everything needs to be recorded digitally. So anybody who currently uses cash books or bags of receipts and sends it to their accountant will need to change. Whether that be you have online cloud storage, hopefully it is secure enough for you to store all your records on there. But yeah, whether you take pictures, let's say receipt by receipt, and upload them into OneDrive, Google Drive, obviously provided that the security measures are there, that is something that is going to take time. Sticking everything into a bag and potentially losing that bag, HMRC won't say, oh, you've lost a bag of receipts, or we'll let you off, we'll tap you on the wrist. They're not going to do that. They've been quite adamant that it needs to be digital record keeping, and therefore if taxpayers aren't going to follow their rules, then they are going to be punished. As you're quite aware, the record keeping rules at the moment, you're allowed to keep receipts in a bag and keep them for 6 years, pretty much. This won't be it. So I would actually say that keeping them on cloud-based systems such as OneDrive or Google Drive or even GoSimpleTax is a lot easier for yourself as well. You've not got 6 different bags of receipts per tax year sat in your garage or sat in your attic. You can actually take a picture, and provided that you've got them backed up, then you can pretty much burn them, bin them, or whatever you want to do with them, recycle them as and when. So yeah, start planning now. You obviously need to be working on digital electronic systems by April 24. And for those of the accountants in the room, if we do have accountants joined, then you'll have a big ask for getting your clients to change. I know from my experience in practice that clients are reluctant to change. If you tell them the deadline is the 31st of January, you'll be getting an email on the 30th of January saying, can you turn this around quickly, please? So yeah, it'll be very interesting to get people to change, and it is going to be quite hard work, to say the least, for people who are used to reporting annually when they're going to have to report quarterly going forward. If you don't fall within the soft pilot scheme, obviously they've not expanded it yet when they should have done in April, then just follow the compliance now. When you get a receipt, take a picture of it, upload it onto a system, whether it be attaching it to GoSimpleTax and complete return as you go along, which you'll see shortly, or whether it be just taking a picture and stick it in a cloud-based storage, OneDrive, Google Drive, and then having your tax return updated quarterly is also following the compliance now. Just keeping everything up to date every few months. That way, if you were to use GoSimpleTax, then you basically get a tax estimate as you're entering the figures, and you can sort of see where the tax figure is going to be as you're entering in. So yeah, if you can't join this soft pilot scheme, then just follow the compliance and keep up to date already. So do you need to know anything further? You've obviously got the Q&A box on the top left of your screen. Anything that you want to know more about, whether it'll be the basis period reform, whether it's to do with the quarterly deadline payments, not quite a deadline payment, sorry, quarterly deadline submissions, whether it's what is MTD for income tax, if I've not answered that question for you, then please ask now. We will be going through a Q&A after a short demo of GoSimpleTax shortly. but I can imagine a lot of people are just sat there like this emoji in the middle of the screen now, quite mind blown with the amount of information that we've just packed into 35 minutes worth of talking. Hopefully I've not put you to sleep. Hopefully it's been rather interesting. Hopefully there's quite a few questions for me to answer a little bit later on. You can always email myself or Leanne after this webinar if you want to know more information about anything, whether it be GoSimpleTax, whether it be about MTD, and we can answer those questions for you. But now, just to get an idea on how I've done today, hopefully it's rather well. Leanne, can you do the third poll? So, has the webinar today provided you with the information you need to better understand MTD and the requirements? So, if you have answered no, I'm still confused, make sure you enter a question into the Q&A. Likewise for somewhat, but I still need to know more. For those people, can you please also write in the Q&A what you need to know more or what you want to be elaborated on a little bit more, and we can work on that either next time or a little bit later on in the Q&A section. And then, yes, I feel more confident. That's good. So just once again, I'll wait for the votes to stabilize. Currently, we've got no, I'm still confused, as 0. Let's keep it at that, as I hope we have explained what MTD is and how to prepare quite good during this presentation. So the votes seem to be stabilizing now. And I'm just going to publish the results. So we've got 0% as no, I'm still confused, which is great. I think I've done my job today then. We've got 56% of people who have voted somewhat, but still need to know more. Then I hopefully have got 9 questions in the Q&A box of what you want to know more of, whether, as I say, whether it be a section of this webinar, a presentation, or whether it be something else that you've heard that I haven't covered. So make sure, once again, that the questions are asked so I can help change that somewhat to a yes. And then we've got 43% of people saying, yes, I feel confident. So I'm happy with that. I'm happy with that. So just before we go on to the Q&A, I'm just going to stop sharing and flick over to my account on GoSimpleTax. So hopefully on your screen now, we're just going to run through a quick demo. You'll see that once you've registered, which is quite easy, I think you just need your first name, surname, email address. Then you will go through to an onboarding screen where you choose whether you want SA 100 individual personal tax return or whether you want SA 800 for partnerships. I've just chosen the schedules that I need on mine, and you will be met with the following page. So on this, you would have chosen that you are self-employed, and therefore a blank SA 103 schedule will attach to your return. So if you are going to use GoSimpleTax, always start with personal details and update the information on this pop-up. So we are going to use Taxman 1. Obviously, that's not my name, but just for this example, you'd put your full name in there. Choose your gender on here. Choose the date of birth. Oh, state your date of birth, should I say. Make sure you're reading all the questions and answering specifically. It is quite quick to set up the account. So registered blind, no. Scottish taxpayer, no. Phone number in there. National insurance, if you know it, stick it in there. You've got address. Oh, didn't mean to do that. And then we've got postcode. Unique taxpayer reference, you'll need to put your actual UTR in here, just so you get linked correctly on the system. When you make payment, your UTR is basically the link to all our systems. So if you haven't put in the correct UTR straight away, you'll have to contact support to update this, as it does get blanked out once you have entered the UTR. So I'm just going to put a dummy UTR in there for now. Marital status is single, and I am not a Welsh taxpayer. So press and save. You'll see that the update details updates to the name that, well, your name or your client's name if you're an accountant. And we are looking now at the self-employed page. Once again, every time you start a schedule, you should always press the edit button first. Edit button is basically where the main details are hidden majority of the time, so for the setup of the page. So for this self-employed business, we'll go for personal training. We'll go, there we go, personal sports trainer. Again, entering in the address of the business, that should be 1. PL54, I think I put. And then just looking at questions relevant to the business. So I'm not going to run through all the questions because you'll probably get bored of me repeating what's on screen. But has the business information changed? No. Started after the 5th of April? No. That's basically if you're a new business, you wouldn't answer yes there. Did I cease? No. My accounting period relates to the tax year. I'm happy with that. If it doesn't, then update it. Prepared on the cash basis? No. Exempt from class 4? No. Registered for that? No. Deferment? No. Losses from previous year? If you are have losses from previous years, make sure you enter them in there so they can be applied later on. Do I want to summarise expenses? Yeah, why not? Tax deducted? That's not CIS. Do I want to complete self-employment full? No. No balance sheet, and I'm not a foster carer. So just save on there. And that is the background of the SA 103 schedule now set up. So you can see there that the business personal training has updated here and here. So let me just delete off these expenses and expense categories, and we'll just start from a blank canvas. So you'll see on all of the schedules that the same intuitive design is used. You've got the income section and expense section. Press the plus sign under income and choose the relevant category. I'm just going to choose sales for now. You can include a date if you're going to enter each individual invoice, or you can do a summary of each month. So if you want to do April, 1500. If you wanted to include a PDF document of a summary of all this £1,500 or the single invoice for £1,500, you can do, and then click save. If you wanted to then add monthly by month, you can do sales. Then in this one, include for May. May we did a little bit better, 1,800. We can include the invoice on there if we wanted to, press save. So on and so forth. As we're going along, you'll see that the total of income starts increasing, and because that is within the personal allowance, there's no tax due at the moment. If you wanted to edit anything, you've got a little pen tool. Press the pen tool. We're not going to do April anymore. We're going to do full year, and then we earn 27,500 for the year. Click save, and then we're just going to remove that May entry. So you can see here now that the tax due figure has automatically calculated based off the fact that we have income of £27,500. Not including any expenses yet, so let's get some expenses in there. Similar to how you include an income entry, click the plus button and choose the relevant group for expenses. So I'm just going to include some of the normal ones you'd expect to see in most businesses, and then press save. Car, van, travel expenses, press the plus sign and choose anything relevant in terms of there. If it's not currently on here, then you can just put other car expenses and then label it yourself, such as exhaust, I don't know. new exhaust, and therefore click save, and then it'll be descriptive as exhaust on there. For this example, I'm just going to stick some fuel in. Fuel for year will include £5,000 spent on fuel for the year, and the private use of the vehicle that we used, let's say 50%. Oh, just got someone at the door there that you're probably able to hear. So I'll leave that for now. So you can see now that the £5,000 entry for fuel with 50% private use adjustment included on there has been prorated down to £2,500. Likewise, let's go into rent. We've got rent for the gym because it's personal training. Rent for the gym, and that was £2,500 during the year. Press save on that, as that was 100% business use. If you have accountancy or software fees, let's because at the door is clearly listening to the fact that I'm not going to the door. So yeah, we've got software GoSimpleTax £49.99, for example, on there, and we are slowly building up the expense categories to do with the self-employed business. The tax due was previously £4,800 and is now £3,200 because as we've been including these expenses, the taxable amount obviously gets reduced, and therefore the tax and NI due will obviously go down as well. To enter a new page, you would press the plus button on the left hand side, and you've got a list of all the schedules that you can include. If you've got interest in dividends, and you've got SA 100 and SA 101 to include on there. If you've got a property business as a landlord, once again, press select on there. Property business, or you can put the address of each of the properties. Number of properties rented out, you can either do a summary of all SA 105 income, such as, let's say, 5 properties, and then you can include a total of all of the properties. So on here, you could either go rental income received, property 1 was 9,000 for the year, save, property 2, etc., etc. And this slowly builds up to be the property business as a whole, both income and expenses. So add expenses, once again, intuitive, same as the other schedule. Add the group that's relevant, mortgage interest, rent, insurance, and press save. Those sections add to the return, and then therefore you have got options under each category then. Don't want to spend too long on this, but obviously we've entered in some income here. We've got a tax due figure. Go to the reports page, and we can see a tax calculation based off the amount of profit from the 2 entries on the system. 22,450 and 16,500 on the property and self-employment. That's how much tax is due, along with any national insurance due on the business as well. And then you've got a summary underneath of where the tax liability comes from. So you've got 5,200 of the tax liability plus class 4 plus class 2 equal total tax. If you've paid tax at source or payments on account, then they would come off there, would leave a balance of the total there plus payments on account, because obviously more than £1,000 is due and it's not deducted at source. Therefore, 50% of that will fall due by 31st of Jan, as you would expect. You can download the SA 100 and flick through the tax return on here. So as you can see, just looking through the tax return, you can see all the entries as and where we've put them. And then you can also download a copy of the tax calculation here. If you need support, then you've got a little red question mark down in the bottom left. Press that. First of all, you've got articles which will help you, help articles which you can then search. So if you didn't know how to do or where to put your P60, then you can press there, type in P60 and enter. And how do I add a P60? And you get photographic instructions there, or you can just message support, put your name, put your email address that you want to reply to, the subject, and then a description. Send that off, and support will get back to you as soon as possible, whether it be myself or one of the team. So yeah, that is pretty much GoSimpleTax in a nutshell, nice and quick. You have save and continue over here, click yes, and you've just got a few of the questions whereby you can't fit them on any of the schedules. So national insurance number wrong, people used, did you use tax advisor, all additional information, flick through all these questions where relevant. And if you want to include any information to HMRC for box 19, then include it in there, and you can proceed to do the submission process. So nice and quick demonstration there. Hopefully it is quite intuitive and isn't too confusing there. So I'm just going to share the Q&A now. Leanne can jump on with me and just talk me through the questions that I've been asked. Hopefully there's been quite a few. I would expect to see at least, was it 9? Because people said that they were somewhat aware and wanted to know more.
I think we've got about 8 on there at the moment, so yeah, we're doing quite good. Just before we do go to the Q&A, could you just flick over to the final slide?
Yeah.
Yeah, for me. I'll just let everybody know, just in case people need to pop off. So just before we start the Q&A session, to give you a moment to write any more questions if there are, we'd like to thank you for joining us today by way of a 50% discount off the software for new customers. The discount code will be emailed to you automatically after the webinar finishes. But just to make you aware, it is a limited time offer. You'll have until Friday the 8th of July to use the code. So this should give you a couple of weeks to play about with the software. You can go through the link gosimpleTax.com/listen, and that will then give you time to play about with the software. The pricing on screen, hopefully you can see it. I know sometimes it can be a bit small. Just for a single return is just $49.99. However, with the discount that you're going to get with the 50% discount, that's going to be an even better £25. Okay, so if you are like me, I'm an event person. If you're going about the day today, tomorrow, a couple of weeks' time, and you think, I should have asked this question during that webinar, just simply reply to the email that you'll get with the discount code. Myself or Aidan can pick that up for you. Okay, so I'm going to have a look at these questions for you now, Aidan. You ready?
Yeah.
Okay, so we've got, I'm a sole trader and I use the 6th to the 5th of April as my accounting year. As MTD will involve quarterly submissions, should I run my accounts by tax month, so 6th of April to the 5th of May, 6th of May, 5th of June, etc.?
Yes. So just looking back to these quarterly deadlines, you've got quarterly update 1. If you are following the tax year, then you'll follow in the tax month submissions. So it'll be the 6th of April to the 5th of July will be your first quarter, which will be due by the 5th of August, and so on and so forth. 6th of July to the 5th of October to the 5th of November will be the final deadline. So yeah, if you're following the tax year, then no need to do a calendar quarter election, no need to worry about the basis period reform. You're nice and set for MTD in April 24.
Okay. Morning. If I'm a landlord using a limited company as an SPV, will I still need to file a return as a director of the limited company where my company's profit is more than 10k, but my personal earnings from the company via PAYE is less than 10k?
For those that are in limited companies, you're currently not in the scope of MTD. As far as I'm aware at the moment, MTD for limited companies, it will be introduced from April 26. So you've got a couple of years whereby you don't need to follow MTD ruling, provided that there's no delays, of course. But yeah, as far as I've seen online, limited companies and that sort of thing will fall into MTD from April 26. They've not done much in terms of advertising at the moment for that. So whether it's actually concreted in as April 26, we're not too sure. But yeah, so no, you won't have to in April 24. But once MTD for limited companies come out, then yes, you will.
Okay. Hi, as a sole trader, I do my own accounts and use a tax company to deal with my tax return each year. Does this mean I'll need to do exactly what I'm doing every 12 months, but from April 24 do every 3 months in order to make a quarterly submission?
Yeah, pretty much. Whereby normally you'd obviously gather your 12-month information, hopefully following the tax year. So from the 6th of April, you'd start looking at last year's tax. Then from now on, when you get to the end of the first quarter, which obviously is the 5th of July, you'll then have to do a quick gathering of that 3 months information within that month to meet the deadline for 5th of August. So yeah, every 3 months rather than every 12.
Okay. I'm a part-time childminder who uses an accountant to manage expenses. Would I be able to use a spreadsheet instead and submit every quarter, which would be the best way to upload receipts if those are also required on submission every quarter?
Which would be the best way to upload receipts if those are required. So you don't actually need to include the receipts on submission. It's just that you need to hold them digitally if HMRC were to request your digital records. So if you want to use spreadsheet, yeah, that's fine. However, hopefully looking at GoSimpleTax, that answer would actually be a lot easier using GoSimpleTax, as you can just include your entries as and when you receive income, include it in the income section. When you have an expense, include it on the expense section. And if you want to take a picture of the receipt directly from your phone on your web browser using GoSimpleTax, then or using the app, then you can do. So you don't have to submit the receipts. It's just that you have to hold them electronically, and GoSimpleTax will be MTD compliant, so you could do all that just within GoSimpleTax, to be quite honest.
Okay, and then last one, just to round us off perfectly for the hour. I do my own accounts and use a tax company to deal with my tax return. Will such companies still be able to do this, or will I have to get my own MTD-approved software and do it all myself? So in essence, can you just keep continuing using the tax company to submit these new quarterly submissions?
Yeah, you can continue using a tax company. I would imagine that having 6 times as many submissions than currently, then you will see a fair decent increase in fees. If not, then hats off to the tax company that they're going to take a hit on the additional work with less fees. I can see a lot of people looking to do MTD themselves, as they'll be paying, I would expect, at least 3 times of what they currently pay in order to match the requirements for MTD. That's just off the top of my head and what I would expect. But yeah, you can continue to use a tax company, but I can imagine that costs involved with a tax company will increase quite significantly due to the increase in communication, chasing, submissions, all that sort of thing. So yeah, you can continue, but if you want to use your own software, it might be a bit cheaper.
Okay, I think that was all the questions coming through, and we're perfectly there for just like an hour for where we started. Thank you, Aidan. Okay, so I'll just thank everybody. So thank you for joining us today. And again, thank you to Listen to Taxman for allowing us to present this webinar. Enjoy the rest of the day, whatever you're doing. Thank you and goodbye.
Thank you, everyone.